Financial reporting for banking institutions. So a bank like KCB, how will it make its financial reports? How will the financial reports of a bank like ABSA be looking like? This is very easy. So and we shall start straight away with the income statement, or the statement of what year? Comprehensive incomes. The statement of comprehensive what year? Incomes. Now, ladies and gentlemen, listen and listen to me very well. You must appreciate that a bank is not your normal kind of a business. A bank, in this case here, does not have opening stock. It doesn't have stocks. Opening stock, what are you procuring? So you can't get cost of sales by take opening stock, add purchases, less closing stock. No. So for me to be able to appreciate, ladies and gentlemen, how a bank will be putting up its income statement, I must really understand the business model of a bank. So a bank does two major things. A bank will receive money from customers. So it will be having what we call deposits from customers. So we have here deposits from customers. So deposits from customers to a bank, ladies and gentlemen, this is not your money. This is not the bank's money. So in the context of the bank, deposits from customers, they become what here? Somebody, they become liabilities. This is a liability to a bank. Very important. Now, of course, ladies and gentlemen, when this bank at the end of the day gets this money, this is the bank here. It has gotten money from customers. So deposits from customers. So then what they'll do, they'll not stay with this money. If they stay with that money, of course, they'll not be able to make any profits. So they need to go and lend this money out to other what here, somebody, to people there. People would want to go and invest, right? Who would want to use this as their working capital in their own businesses. So, ladies and gentlemen, it means that out of this, we have created a pool that we shall be able to advance loans. So loans, in this case here, loans done what here? Loans advanced. Loan advances. So listen and listen to me very well. Out of these loan advances, the bank will receive what we call interest. They'll get interest. That is their income. And of course, from the customer deposits, ladies and gentlemen, they'll be paying also what we call interest. So we have an interest income and we have an interest what here? Expense. Interest expense. Right? Now listen and listen to me very well. The other thing you're supposed to know that is that banks don't just invest the money that they have by just giving out loans. No. They also, in this case here, have what we call non-interest income. Non-interest income, right? Ladies and gentlemen, remember if it's KCB Bank, like for example, we bank with StanChart. We bank with Standard Chartered Bank. So of course, at the end of the day, StanChart for maintaining our ledgers, StanChart for maintaining our account there very well, of course, trying to protect our funds from being stolen, they must charge us some fees. So on top of, ladies and gentlemen, the interest it will get, it will also be getting some other income streams, like now the commissions, when you go there for bankers' checks, right? When, for example, you want them to do some interbank transfers, they're acting like your agents, right? You know, you should ideally be paying this money yourself to your suppliers in America. But because you don't have that possibility, so you go to a bank. So the bank is able to remit those funds. And in the process they remit, they charge like 0.1%. So they're getting what we call commissions and what here? Commissions and fees. So very, very important. So ladies and gentlemen, when we talk of a banking income statement, we shall only be having how many items? 4 items. We shall be having 4 items that we should be able to look at as well within the income statement of a bank. So when we talk of income statement of a bank, income statement of a bank, these are the 4 things you should always be thinking about. Number 1, we have what we call the interest income. Interest income. Number 2, we have what we call the interest expense. Interest expense. Number 3, we have the non-interest the non-interest income, and then number 4, we have the non-interest expense. The non-interest what here? Expense. Non-interest expense. So when they talk of banking institution income statement, if you don't, in this case, you appreciate the 4 items, you'll not be able to put an income statement as per the dictates of IFRS. So as per the dictates of IFRS, any banking institution must always be having what its income statement spread out into the 4 components like this, 4 components like that. I would want to pause a little bit and ask you guys whether you have been able to write the 4 components of an income statement of a bank. Yes. Yes, thank you very much. So when we talk of interest income, I started in this case here by explaining that the bank's business model, the main business model is to advance out what here loans. You advance loans. So loans advanced. And out of the loans that you advance, if you give your investors, if you give an investor outside there 1 million Kenyan shillings, you will not return just the 1 million. This guy, in this case, here must add something on top of the 1 million. So we talk of, ladies and gentlemen, interest income. We shall be looking at what we call interest on loans advanced. Very important. Interest on loans advanced. We shall be looking at things like interest. In this case here that we earn when we place our monies at the central bank. Remember, we are also going to be investing at the central bank. Shall be giving them some fixed deposits at central bank. Remember, ladies and gentlemen, these banks, just like any usual business, they're also going to have an account with the central bank. Just remember, like the old adage, it's very wrong to get a barber who does his own hair. Have you ever seen, in this case here, kinyozi, ladies and gentlemen, who will go trimming down their own hair? Or a saloonist. Have you ever seen any saloonist, in this case here, doing our own hair? Right? No, you're a saloonist, you would want your colleague or a friend of yours, a saloonist somewhere, to do your hair. The same case, ladies and gentlemen, please focus here. This is very important. All those things will come later. Now we want to focus, ask questions about this. Now, ladies and gentlemen, when we talk of banks will also, in this case here, go ahead and place monies at the central bank. So central bank will be paying them an interest. If it's KCB, it has placed some funds at central bank, right? Say 10 billion Kenya shillings. So at the end of the year, central bank must give it what here, some interest. Very important. Very important. So you hear of interest in terms of what here, placement with a central bank, or interest arising out of you placing funds in other banking institutions. Remember, these banks, they've got what we call overnight lending, the placements overnight. So you get like KCB loaning, in this case here, Afr-Bank, like 10 billion Kenya shillings for a week or for even a night like that. So they pay interest. So when you talk of interest income, we're going to be having various sources of interest what here? Income. Various sources of interest income. Now, ladies and gentlemen, when you talk of interest expense, what have we said about interest expense? So interest expense, basically, we are looking at interest expense, ladies and gentlemen, basically, we are looking at interest expense. We are looking at what here, somebody. For the interest expense, we are looking at the customers who have deposited their money with us. We owe them. If they deposit money with us, especially for savings accounts, for fixed accounts, at the end of the month or at the end of the year, you have to pay them back their money when they come for it, or even if they don't come for it, you have to pay them their principal plus what your interest. So it's an expense on your side. It's an expense on your side. It's an expense on your side, etc. Now we come here to the non-interest income. What have we said about non-interest income? Now, these are those incomes you'll be getting, ladies and gentlemen, out of what here? For example, you are managing ledgers of your customers. So when you manage those ledgers, at the end of the day, there will be monthly fees. if you do something for your customers, on behalf of your customers, for example, like RCM Online College, ladies and gentlemen, we make some payments, right? For example, to CASNEB, etc. You see, ideally, we should have ourselves, in this case here, gone to CASNEB carrying our money. To CASNEB, we pay them. But because we want the bank to pay for us, perhaps in this case here, we need a banker's check. These guys will be charging some commission, little amounts in form of commissions. So we have commissions and what here fees falling under what we call the non-interest income. Non-interest income. And then now, ladies and gentlemen, we have here the non-interest what here? Expenses. The non-interest expenses, now we are looking at the operating expenses, the administration, the rent, etc., etc. etc, etc. Yeah, for example, in a bank, you place some standing orders with them that when this money comes, or rather this money, my money comes to the bank at the end of the month, be checking off a standing order. When they pay some standing orders for you, there'll be commissions to be earned. Ladies and gentlemen, please, here we are. Let's now look at a practical example. Let's look at a practical example here. So this practical example is not in your past papers of advanced financial reporting, but of course, it's from the lower level financial reporting. This topic was moved to the advanced level. So this question is very relevant. So don't ask me which sitting. So they want me to prepare an income statement for the year ended 31st March 2016 for a bank called Maendeleo Bank Limited, and then a statement of financial position as at 31st March 2016. So these are 14 marks for me for free of charge. Free of charge. So, ladies and gentlemen, we are told here that the following trial balance was extracted from the books of Maendeleo Bank Limited as at 31st March 2016. So we have property, plant, and equipment. We have interest on loans and advances. So if I'm the one doing this in an exam, I'll open the two statements at the same time. So I start, in this case here, posting them at the same time. So for example, under assets, I'll take this under assets in the statement of financial position. But because here we are still learning this, I would want us to go slowly. We do the income statement, but please be checking out, you don't miss out on anything. So then what I'll do, I'll start with the first one, which is the income statement for the year ended 31st March 2016. So prepare for Maendeleo Bank Limited an income statement for the year ended 31st March 2016. Great. So then, gentlemen, here we are. So what I shall do, I will come right away here. And talk of Maendeleo Bank Limited. So we have here Maendeleo Bank Limited. So Maendeleo Bank Limited, income statement for the period ending when? 31st March. They said for the period ending 31st March. For the period ending 31st March 2016. 31st March 2016. 31st March 2016. Thank you very much. So in this case here, we shall begin with the income. And the income, we give it a special title. It's a interest income. So you mentioned here, interest income. It is interest income. So under interest income, ladies and gentlemen, simply go through the financial trial balance given here and pick the interest incomes. Incomes arising out of interest, out of what here? Your deposits, out of your investments. So we want to move slowly. You guys tell me where to account for this. So we have here interest on loans and advances. What do you think of 16,790? What do you think of 16,790? Where should I slot this? Interest on loans and advances. Please talk to me this morning. I would want you guys to talk to me quite a lot this morning, and that is why I basically brought you here. That's why I basically brought you here. Great. Thank you. I can see so many charts. So that is an interest income. Thank you very much. So we have interest on loans and advances. So we have interest on loans and advances. We had advanced loans to our customers. We have advanced loans of 16,790. So we have 16,790. However, there is an accrued interest. Look at note number 3. Interest accrued are not accounted for in the books as at 31st March 2016 was as follows. So we have interest on loans and advances of 1284. So if it's not accrued, or rather if it's not paid, if it is accrued, you add. If you remember, if it's accrued, you add. If it's a prepayment, what do? You subtract. So this is accrued. We've earned it, but has not yet been accounted for. So we add. It's accrual concept. So I'll come and talk over 16,790 plus 16,790 plus the interest on loans accrued of how much? Of 1284. Of 1284 like that. Of 1284 like this. Now, ladies and gentlemen, could you kindly give me this figure? Could you kindly give me this figure? Is there somebody who is able to see this figure? Give me this total figure. So Irene gives me 18,074. 18,074. Thank you very much, Irene. Now from there, I will display. I will come here and display. I'll come here and display this question paper and ask you guys whether you are able to see other form of interests arising out of the bank called Mandeleo here, investing out there, where they are earning interest, I would want to hear from you guys. Are you able to see in this case here other situations where these guys are investing? Please check keenly. Check keenly. They're not talking to me. Check keenly. Great. Thank you so much. Like now we have what they are calling here interest in government securities. Interest from government securities. Where is that figure? Interest from government securities. Please look for it. Interest from government securities. Yes, you can see government securities here. We have an income. Of 49 what here? 4960. It's an income. It's on the credit side of the trial balance. So government securities 4960. So interest from government securities. Thank you very much. Interest from government securities. How much? Please remind me the figure. Interest from government securities, how much? Interest from government securities, how much? 93? 9536, Interest from government security, it's 9536, right? 9536, right? And then, ladies and gentlemen, I saw you guys mentioning interest from placement with other banks or in other banks. So they place money in other banks, ladies and gentlemen, then we need to earn some interest. So is there somebody who is able to see that interest? In this case that we shall earn when we place money with other banks? You can see your interest received on deposits and placements with other banks. How much are you able to see, ladies and gentlemen, here? How much are you able to see, ladies and gentlemen, here? How much are you able to see? In terms of interest on government, it's given up here. Interest on government security was given up here, 9536. It was given up here, right? It was given up here, right? 9536. So interest and a deposit, interest with the interest on deposit placed with other banks, from other banks, how much? Somebody give me a figure. How much? They're saying it is 7,600. You can see interest received on deposits and placements with other banks, 7,600. 7,600. Thank you very much. Now, ladies and gentlemen, are you able to see any other interest income in this question apart from the three? Are you able to see any other interest income apart from the three? This is your class, remember. It's not my class. This is your class. This is your class. This is your class. I can see, for instance, there is what we call other interest income. Is there anybody who is able to see other interest income? Other interest income, they're not seeing this. Other interest income. Other interest income of what here? 860. Thank you very much. So this is 860 like that. Other interest income, yes. Other interest income. So we have here other interest income. So other interest income, I'm being given a figure of what here? 860. Other interest income. See here, 860, like that. 860. 860. So then, ladies and gentlemen, what you'll do, come and give us the total there. Please give us the total there. You need your calculator very well to give us the total in form of what here? The interest income. Total in form of the interest income. Total in form of the interest income. They are getting, how much are they getting? How much are they getting? 36,070. They're getting 36,070. 36,070. Thank you very much. 36,070. So 36,070. Once I get these, I will come very fast and look at the interest expense. So interest expense, now we are looking at, ladies and gentlemen, people who have lent us money, right? People who have lent us money. How much interest are we paying them in return? And of course, the primary investor here is the customer who has given me their money, the customer deposits. So in this case here, go ahead and give me the interest on customer deposits, or rather, I should give you a minute and then you try to identify this interest, what here the interest, what here the interest expenses. Try to identify them from here. Try to identify them from here yourselves. Take like 5 minutes to identify them, all of them. Great. Thank you so much. I can see you guys are really getting involved. Thank you so much. Thank you so much. Thank you so much. So I can see they have been able to identify. They have been able to identify. Or they can't see. Thank you very much for raising that, because you know this video you're producing for people outside there. Thank you so much. Now I've been able to expand it. Yes. Yes. So what do we have here? So students have been able to raise these interest expenses. They've been able to raise the interest expenses. You can see from the charts here. Students have been able to raise these. They're telling me that the first one is the interest on customer deposits. Interest on customer deposits. Yes, that is an interest expense. So interest on customer deposit of how much? Are you able to see the interest on customer deposit? Yes, I can see here. It is what here, somebody interest on customer deposit. I can see 10,616. But you see there is an accrued interest on deposit. There is an accrued interest on customer deposits of 896. I need to add the two. I need to add the two. So we have interest on customer deposits. Interest on customer deposits. Interest on customer deposits. So we have here interest on customer deposits. We shall be paying them. we shall be paying them. So in this case, I need to take interest on customer deposits. I need to come here, interest on customer deposits. Yes, I need to take in this case here the 10,616 plus 896. 10,616 plus 896. So we have 10,616 plus 896, of which somebody is able to give me a figure of how much here somebody. I've seen already some figure being floated here, a figure of how much, ladies and gentlemen. 11,516. We have 11,512. I mean, 11,512. You place this here. 11,512, like that. Great. So is there any other interest expense? Yes, they were able to really list them here. Like we have, ladies and gentlemen, other interest expenses from Winfred. Other interest expenses, we have other interest expenses. Let's check here. So we have other interest expenses. Other interest expenses. We have what they are calling other interest expense, which is what here 628, which is 628, like that. So other interest expense, yes, it will fall under interest expense. So we have other interest expense. Other interest expense of how much? Of 628. Thank you so much. So you place it here. And then remember that there are other banks now that did placements with us. They place their money with us. So what we do when we're returning these placements to them, we have to return this placement to them with interest on top. So we have in this case here, interest on placements from other banks. Interest on placement from other banks. Are you able to see that figure, somebody? Interest from interest to interest in this case, ladies and gentlemen, to other banks, basically. Are you able to see interest? Aha, here. Interest paid on deposit and placements from other banks. Of how much, somebody, we are following? Of how much, somebody, we are following? Of how much, somebody, we are following? Of how much, if you're 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 following? Should be interest paid, eh? Interest paid on deposit, 25 what year? 2560. Thank you very much. 2560, you come and put it here. So 2560, you come and put it here. So ladies and gentlemen, is there any other interest expense? So this is interest on placements from other banks. We have 2560. Is there any other? Of course, as you're doing this in an exam, you're also leaving some space, eh? All right, you're leaving some space just in case something crops up. You'll be able to do what here? You'll be able to, ladies and gentlemen, right? Slot it later. So then that is it. Please give me the total. Please give me the total here. Please give me the total there very first. Please go ahead and give me the total. So we have here 14,700. I'm being given a figure of 14,700. So subtract there for you to get the net interest income. The net interest income. What are we getting there as our net interest income? What are we getting there as our net interest income? They're getting 21,370. They're getting 21,370. So 21,370. Now, when we began, ladies and gentlemen, I told you that there are 4 key things that you must always remember in a banking income statement. 4 things. Is there somebody who can again take this opportunity to remind us those 4 things? The 4 things that you must always see in an income statement of a bank. Please remind ourselves. Those 4 key things are which ones? Quick reminder, you can see what this gentleman called Gordon has told us. We have the interest income, interest expense, then we have the non-interest income, and non-interest expense. Could you kindly write them somewhere as a summary? Abby, thank you very much. I can also see what you have given me up there. We have interest income, we have interest expense, and you must arrange them in that order. Then we have non-interest income, and then we have non-interest expense. Now we have taken care of the first two. Now I want to move to the next third one, which is a non-interest income. The non-interest income. So for me, I would want to delete, of course, whatever I've written here for purpose of creating more space. I believe you have the figures, right? I believe you have the figures. Now I'm going to what we call the non-interest income. I'm going to the non-interest income. So now you should be able to follow through because of what that summary. So the non-interest income, when they mention anything to do with non-interest income, what comes to your mind? What comes to your mind when they mention things to do with non-interest income? What kind of incomes are you looking at? You as a banker, you reason like a banker now. You reason like a banker. You reason like a banker, non-interest. Now here, you're not going, it's not an income you're getting because you've lent money outside, right? It's an income for the other services that the bank does, for the other services that the bank does, right? So in this case here, I can see good comments here. We have ledger charges. I like this. We have commissions, fees, commissions. We have the bank charges, especially the ledger fees, commissions. Any other thing under non-interest income? Is there anybody who is able to think of something else apart from the three? Foreign exchange gains, yes. Foreign exchange income. Foreign exchange income is what here is a non-interest income. Is a non-interest income. For sure, I don't think you guys even really needed this lesson. It's like you guys are so good. It's like you guys are so good. So we have here what they are calling here non-interest income. The only figure I would want us to remember is the figure that we had somewhere here. Was it 21,370 up here? There is a figure we had up here before I rubbed mine. 21,370, right, yes. And then now we have the non-interest incomes. So the fees you're going to levy on your customers for standing orders, right? The commissions, you call it commission on standing orders, etc. Those ones will bring them here. So the non-interest income, so we want to project this, and then you pick them very fast as usual. Please pick them for me. Please pick them for me. Try picking them up. They're here. And remember, as you're doing all these, don't forget also the notes of the accounts. Don't forget the notes of the accounts. You must be also looking at the notes of the accounts and ensure that you make appropriate adjustments. Remember, this is your lesson. It's not my lesson. All right, so I can see, ladies and gentlemen, what they great. Fees and commission income, 1528, fees and commissions, because we are also going to charge fees and commissions. I have to look for this. I have fees and commission income of 816. There is nothing accrued there. Great. So we have fees and what here? Commissions. Fees and commissions. They have even given me a figure of 816. And then they are telling me, Mwalimu, you know what? This bank has also invested in other government, not government, but for example, in shares of other companies. So we have what they're calling dividend income. Dividend is different from interest. Remember, interest is fixed. Dividend you get when a company is making profits, at times they may make losses and you don't get dividends. So dividend is different from interest. It's called non-interest income. So we have dividend income. So dividend income, are you able to see that dividend income? Dividend income. Dividend income, are you able to see the dividend income here? So the dividend income that you are able to see, ladies and gentlemen, it's here. Dividend income of how much? Give me the figure, please. You guys are young, you can see those figures very first. Dividend income of how much? 816. So fees and commission is not 816. It's dividend income, which is 816. Sorry for that. It's dividend income, which is 816. How about fees and commission? Fees and commissions are being told it's 1528. 1528. Thank you very much. Is there any other thing that we have left out under non-interest income, really? Under non-interest income, nothing really. So please come and add the total to give us the gross income. So give us the gross total income. The gross total income, right? 2344. So I would want you to combine. Okay, if you wish, you can come and talk of this outside here. 1528, 816, fine. So you're getting here 2344. So this 2344 is what you transfer here. 2344 is what you transfer there to give us the total, the gross total income. So gross total income, what figure are we getting here? What figure are we getting here? So this plus this, what figure are we getting here? We are getting 23,714. 23,714. Thank you very much. This is the gross total income, like that. Once you get the gross total income, what else do we think about? Remember, there are 4 components of an income statement of a bank, right? We have the interest income. We have the interest expense. Now you've brought in the aspect of the non-interest income. Now we go to the last component, which is what here? Somebody 22. They're saying it is 22, 23, 714, 23, 714. Thank you very much. Yes, that's what I wrote here. 23, 714 years. Thank you very much. So now we go to the last item. The last section is the most interesting one. Is there somebody who is able to see or rather tell us the last? So it is a non-interest what here? Expenses. So the non-interest expenses, before we start picking them up, are you able to recall generally what do we have under non-interest expenses? What are some of the things in this case here that we should expect to have under non-interest expenses? Some of the things we expect to get under non-interest expenses are like which ones, right? We have rent, thank you very much. Salaries, yes. Yes. Depreciation, thank you. Depreciation, yes. Salaries, rent, Any operational expenses, yes. If they said to use the word operational expenses, administration expenses, yes. Bad debts and provisions will fall here. Very important. Any repairs, yes. All those are what are now non-interest expenses. All those are non-interest expenses. So I want to give you 5 minutes from the question that we are doing, ladies and gentlemen. Could you kindly identify those expenses, write them down with the figures, write them down with the figures. And if there are any accruals or prepayments, please make adjustments, remember. Give me the net figure, please identify them. Identify them. From the question that you're doing, try identifying them. Try identifying them. Thank you so much. I can see 3 charts. There are few, but now we have to move on because of time. You told me to end at 6:30 exactly, right? So, ladies and gentlemen, thank you so much. Like I can see Nicole giving us salaries and wages of 4360 and then repairs. Those are non-interest expenses indeed. So salaries and wages, please look for salaries and wages here. So we have salaries and wages, and I hope you guys are ticking your things. You must tick them up. You must tick them so that we will be able to capture everything. Salaries and wages, salaries and wages. Are you able to see them? Salaries and wages. Where have they given us salaries and wages? We are looking for them, right? Yes, I can see salaries and wages of 4368. Thank you very much. Salaries and wages of 4368. So salaries and wages, please give me the figures. Remember, don't forget to give me the figures. So we have salaries and wages, salaries and wages of how much? We have a figure of 43. They have forgotten to give me these. Salaries and wages, they have forgotten to give me the 4368, isn't it? 4368. Then, ladies and gentlemen, we have another one that students have been able to identify very fast. I'm working with what students give me here. We have a repair and maintenance of 420. Repair and maintenance. Repair and maintenance of 420. Thank you so much. All right. I can see in this case here, they are giving me depreciation of 1630. These are figures given here. These are figures given here. If you look at this very well, you'll be able to see, for example, the directors' emoluments here. Directors' emoluments, directors and fees. It's an expense of the company. So you have directors' emoluments. Who can give me this figure of directors' emoluments? Directors' emoluments of how much? Directors' emoluments of how much? Who can give me that figure? Directors' emolument, if you're able to see the directors' emolument. Hope there are adjustments down there. So directors' emolument, I'm being given a figure of 1290. So 1290, thank you so much. And then Cachero had identified depreciation. Depreciation of how much? Cachero had identified depreciation of how much? He had identified depreciation just next year. Yeah, of 1630. Depreciation of 1630. Thank you so much. Is there any other expense apart from the 4 printing and stationery? I'm being given a figure of printing and stationery. Thank you very much. Printing and stationery. Please look for printing and stationery. I'm being given a figure of printing and stationery of 556. Printing and stationery of 556. Printing and stationery of 556. So we have here printing and stationery of 556. Is there any other thing, ladies and gentlemen? Other operating expenses of 3260. Other operating expenses. So we have other operating expenses. Other operating expenses of 3260. Thank you very much. Other operating expenses of 3260. Any other? Dividends paid, Marietta, cannot come really. Dividends is an appropriation of profit after tax. That will come later. It's not an expense to the company, right? Before that, is there any other? Yeah, we have bad debts written off, isn't it? Bad debts written off, yes, 558. I have to continue mine on this other side. Bad debts written off, yes. Bad debts written off. Bad debt written off. So we have here bad debt written off. Bad debt written off. So bad debt written off, I'm being given a figure of shillings what here? 558. Shillings like that. So I'm being given a figure of shillings 558 for bad debt written off. And then we have provisions, yes. But remember, for provisions, you always work with the increase. You take provisions at the beginning of the year, vis-a-vis provisions at the end of the year, and then you look at the increase or decrease. If it's an increase, it's an expense. If the provision decreases, it's accounted for under income, non-interest income. right? So, ladies and gentlemen, we have something very important here. We have something very important here called provisions. So provisions, they have told us here an analysis of data at the end of the year revealed that an additional provision of 3.7 million for non-performing loans should be made, right? Additional. So in this case here, are you able to see any? So the additions or provisions, ladies and gentlemen, provision for bad and doubtful debt is how much here? Is the 3.7 million. A provision of 2.1 should be made for tax. This is taxation. So provision, ladies and gentlemen, the thing that we need to do for provision is to take the 3.7. Provision, we have 3.7. Provision for bad debts. Provision for bad debts. Provision for bad debts. Provision for bad debts. We have a 3.7. So provision for doubtful debts. Doubtful debts. Increase, remember, we are working with an increase is 3,700. Is 3,700. So do we have any other expense? Please be keen. I'm again giving you 2 minutes. Don't talk of interim dividends, Frida, here really. We don't pay dividends as an expense. Please be very careful here. Be very careful here. Be very careful and look for take 2 minutes, take 2 minutes, take 2 minutes. Okay, so do we have any other expense here, ladies and gentlemen? Do we have any other expense? Do we have any other expense? Do we have any other expense here? Do we have any other expense? So if there is none, could you kindly come and give us? Could you kindly come and give us? Could you kindly come and give us? Could you kindly come and give us a straight, ladies and gentlemen, our total amount? Give us our total amount here. Give us our total amount here. Give us our total amount. 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 I'm told they are miscellaneous. This is miscellaneous accrual. It will go to the balance sheet, isn't it? It has been accounted for. It has been accounted for. Right? So we have here 15, 7 what here? 82. 15,782. So this 15,782, 15,782 is what now we shall come under 15,782. 15,782 is what we shall subtract from this 23,714. From the 23,714 is what we shall subtract. Is what we shall subtract from the 23,714 to get, in this case here, what we call profit before tax. To get profit before tax. Profit before tax, you take 23,714 minus this 15,782. Are you able to get a figure, somebody there? We are getting 79,32. 79,32, thank you so much. So this 79,32, So come and give us the tax element. If they give us, for example, a tax percentage, would have taken the tax percentage there straight away. Now, ladies and gentlemen, come here. The tax, what have they told us about any taxation? Tax. Is there anybody who is able to see tax? Tax. Is there somebody who is able to see the tax? Tax to be paid. Tax to be paid. Please talk to me. Are you able to see the tax to be paid? The tax in this case here that will be paid. They're not able to see the tax, these students. They're not able to see any taxation. No, they're chatting here. I can see the charts here. Number 2, a provision of shillings 2.1 billion should be made for tax like that. 2,100, yes. Right. So in this case here, we have taxation is 2,100. So taxation is 2,100. So 2,100, please subtract for you to be able to get what we call profit after tax. Profit after tax. So profit after tax. So profit after tax, please subtract profit after tax. They're getting 58.32. Now it's after getting this 58.32 profit after tax that we go ahead and make appropriations. We pay dividends. We pay dividends. So for dividends, remember dividends will come and less dividends. You'll come and less dividends. So dividends, what do we have? We have the paid dividends, and the proposed, isn't it? Both of them, you have to provide for them. So the paid dividends from the trial balance, are you able to see in this case here the dividends that we paid? Are you able to see the dividends that we paid? Dividends paid. Is there somebody who has got very sharp eyes? Anybody with, you can see the interim dividends here. How much? Interim dividends, how much? Interim dividends, how much? Interim dividends paid, 800. Thank you very much. So 800. Do we have any proposal to pay any further dividends? Apart from the interim? Apart from the interim, are there dividends that these directors have declared and they're proposed and declared here? Any dividends? You can see here, directors of the bank have proposed a final dividend at the rate of what here? 5%. At the rate of 5%. But now the question will be, it will be 5% of what? 5% of what? Is it going to be 5% of the profit after tax? No. It's going to be 5% of what? Your share capital. 5% of share capital, right? 5% of the share capital. So are you able to see the share capital here? Are you able to see the share capital here? Share capital, share capital, share capital. Look for the share capital, you good students of mine. Yes. So share capital, I can see it is 20,000. So then what is 5% of 20,000? So 5% of 20,000. So in this case here, we have proposed dividends. Proposed dividends. So proposed dividends, ladies and gentlemen, what we have here under proposed dividends, is 5% of 20,000. 5% of 20,000, which gives me 1,000. So please subtract the 2 for you to be able to give me retained earnings for the year. Retained earnings for the year. Retained earnings for the year. So retained earnings for the year, what do we have here? Retained earnings for the year. What do we have? Retained earnings for the year. Retained earnings for the year. So they're giving me a figure of 40.32. When I get these retained earnings for the year, what do I do? After getting retained earnings for the year, what do I do? After I get retained earnings for the year, what should we do? What should we do after getting retained earnings? Yeah, brought forward, isn't it? So in this case here, you add retained earnings brought forward from the previous year, isn't it? Add retained earnings brought forward. Add retained earnings brought forward. Add retained earnings brought forward. So retained earnings brought forward, have they given me the retained earnings brought forward at the beginning of the year? Retained earnings brought forward at the beginning of the year. Retained earnings brought forward at the, you can see here. It is how much? It's here. It's here. How much are we talking about? How much are we talking about? They're not talking to me, the students of mine. Retained earnings brought forward. Retained earnings brought forward. Are they able to see a figure? Retained earnings, 49.60, right? So 49.60. So come and add here, 49.60. Now from there, you'll be able to get the retained earnings for your balance sheet. Retained earnings carried forward, retained earnings that will take to your statement of financial position under equity. Under equity of how much? Of 89.92. 89.92. 89.92, like that, 89.92. 8992. So what I don't know, ladies and gentlemen, is whether they can spare like 10 minutes to do the balance sheet, the statement of financial position. It's very easy. Yeah, it's very easy. It's very easy. Great. Now move ahead then very fast, ladies and gentlemen. Mention there very fast. If you allow me, I'll come and rub the entire. So we have, ladies and gentlemen, here, we have, ladies and gentlemen, what we have here is the name of the bank. So the name of the bank, the name of the bank is Maendeleo Bank Limited, statement of financial position. Maendeleo Bank Limited, statement of financial position as at, statement of financial position as at, statement of financial position as at, statement of financial position as of 31st March 2016. You write this in full in an exam, huh? You write it in full in an exam. 31st March 2016. Very easy, very easy. Why do I like this statement of financial position of banks? Is because like if it's assets, you don't categorize them into non-current and whatever. No, you lump everything together, So we have here, ladies and gentlemen, assets. So I would want you guys to go through the register of assets, through the trial balance, and they pick all our assets, and they don't forget any accruals. Here, pick them up. So I'm giving you exactly 2 minutes. Pick those assets, all of them, write them down. Which assets have you been able to pick now, ladies and gentlemen? Which assets? Thank you very much. They're telling me, Mwalimu, we have property, plant, and equipment. You're right. So we have property, plant, and equipment. I wish I had this physical paper. When you have a physical paper, you're ticking, everything falls in place very easily. Everything falls in place very easily. So we have this property, plant, and equipment of this amount, 28,854. 28,854. So we have here property, plant, and equipment. 28,854. Ladies and gentlemen, we have, in this case here, deposits with the central bank. Any placements you've done with central bank? Central bank, are you able to see anything to do with central bank? Is there anybody who is able to see anything to do with central bank? Right? Central bank. I wish I had a place where I could be ticking this. I would have picked them very fast. cash and balances with central bank, 7260. This is a serious asset for any bank. A serious asset for any bank. Quite a good measure of liquidity, right? So we have here cash and balances with central bank. So cash and the balances with central bank. So with central bank, how much are we able to see there with central bank? With central bank, you guys gave me this figure, 7260. 7260. 7260. Thank you so much. Do we have any other assets, ladies and gentlemen? Do we have any balances that we have with these banks? These banks, are they owing us any money? Are they owing us any money? Are they owing us any money? Have we given other banks money, our money? Placements with other banks. They're not answering my question. Do we have a placement with other banks? Yeah, you can see Gordon where is giving me this figure. Deposits with other banks. Deposits with other banks is 17,120. Deposits with other banks. Deposits with other banks. With other banks, according to where he's giving me a figure of deposits with other banks. Good to confirm the figure from here. Deposits with other banks. Deposits and placements due from other banks. And then we have this deposits and the placements due to other banks. So one of them is a liability, the other one is an asset. You have to be very careful, right? So what we are expecting to receive from other banks is the asset, right? So in this case here, we are looking at this figure that this gentleman gave us was of 17,120. This is the asset. Deposits to other banks, 17,120, yes. So 17,120 here. And then I can see a good lady called Abby has been able to remember a very serious asset. A serious asset that will be giving us incomes in the future. What we have advanced our customers, right? Loans to our customers. Are you able to see loans to our customers? Is there anybody who is able to see loans to our customers? Loans to our customers? Is there anybody who is able to see loans to our customers? They are not seeing this really. Loans and advances to customers of how much? Loans and advances to customers of how much? Somebody talk to me this morning. Talk to me this morning. Of how much? Yes, somebody? Of 135, 300. These are serious asset. 135, 300, 135, 310. So these are loans and advances. Loans and advances to customers. To customers. Thank you very much. Is there any other thing that you guys? Yes. I can see Nancy Kimati telling me government securities. Yes. So in this case here, we have bought government bonds or government treasury bills. Those are assets that will be able to give us an income in future. So we have government securities, 26,400. So government securities. So we have government securities. We have government securities. So we have government. We have government securities. So for government securities, we have a figure of 26 what year? 600, 26,400. 26,400. Is there any other thing that we may have left out, you good students of mine? That we have investment in securities. You know, we have government securities, we have to put them. Those are quite liquid. We must specify them. And then from this student called Catherine, she's talking of investments in securities, general securities now. Are you able to see that figure really? Investment from securities, are you able to see that figure? Investment from securities, are you able to see that figure? Investment from securities, it's here. Investment in securities, it is here. Over how much, somebody? Are you able to see this figure really? Are you able to see this figure, ladies and gentlemen? Are you able to see this figure? Investment in securities, how much are we talking about? How much are we talking about? They're not talking to me, these students. How much are we talking about here? How much are we talking? 10,920. It's an asset. 10,920. 10,920. 10,920. So in this case here, investment in securities, general. This could be like the shares now outside there. So investment in securities. in securities. So we have here 10, 9, 20. Do we have any other asset that I may have left out, which you guys mentioned up here that I'm here to capture? Yes, I can see students who are talking about other assets, isn't it? That we have other assets of 10,600. So we have other assets of 10,600. Other assets of 10,600. Is there any other asset that we may have omitted? I hope you guys are ticking. I know you have printers at home. I know you have this paper here. You can look at this thing very easily. Yes, there is an accrued income. There's an accrued income that can easily be left out. There's an accrued income. There's an accrued interest. There's an accrued interest that can easily be left out. There's an accrued interest that can easily be left out from a balance sheet. You see, we have this interest accrued and not accounted for, right? So we have interest on loans and advances of 1284. So this is a interest receivable. It's your asset. It is your asset. When you receive this money, you'll be able to, it's your asset. So interest receivable. This one, of course, for many students will leave it out. Interest receivable of 1284. Interest receivable of 1284. Interest receivable of 1284. I think now we have captured really most of them. And in case we don't have all of them here, we shall be able to see what to do. So interest receivable is 1284. So could you kindly give us the total amount now? What is the total assets figure? The total assets figure. Somebody is raising something to do with the other assets. I have these already. Other assets, I have these already. Thank you very much for bringing up that. Already I have that. So come and give me the total assets. So total assets. So you can see banks are quite easy because for assets, you don't categorize into current and non-current. We don't categorize. It's about putting in things here. Putting in things here. So total assets, who is able to give me the total assets amount? So from Gordon Were, we are getting 237, 748, or 744. Who is telling me the truth? 237, 237, 237, 237, 748. Jackie has confirmed the 748. Thank you very much. 748. So we have our total assets. You double underline like that. If I had enough space, I would have continued there. But I don't have enough space. So in this case here, what I'll do, I'll rub mine. But of course, I know that the next section should be the section of equity and liabilities. Equity and liabilities. Equity and liabilities. So it's supposed to be 237. Yeah, don't be that keen. In an exam, don't be that keen. You can imagine like right now, you're trying to look at for the most liquid asset. You will not be able to, you know, this question, ML, you're supposed to finish this question in 30 minutes. If you start telling us that let us look at the liquidity order, you'll be out of place, really. You'll be out of place. We're in this exam just to get as many marks as we can, and then we move forward. I hope that answers your question. It will be very hard for you to start telling us that interest receivable is quite liquid. Then it will be very hard, really. I don't want to go there. Okay. Now, ladies and gentlemen, from there, so go straight away to the equity and what here? Liabilities. Go to the equity and liabilities, of which first of all we get our equity. We start with our equity. So equity, I'm giving you, of course, I can see you guys are very bright. I'm giving you 2 minutes. You try to identify the equity elements in this question. 2 minutes, try to identify them. Equity elements in this question, try to identify them, please. I really like it when I see my students giving me charts very fast. So they've told me that the first one here is the share capital. You can see from AB share premium, you can see the valuation reserve. Let's look at the share capital. Share capital, we have a share capital here, 20,000. Thank you very much, 20,000. And then we have some revaluation reserve, which automatically hits onto my equity. Revaluation reserve, I can see, yes, revaluation reserve of 4960, right? And then I can see share premium down here. Share premium of how much? Is it 1528 or 6,000? I can't see very well. You guys are young. Share premium of 6,000 years. Thank you so much. You guys are bright. Although you forgot one thing, retained earnings. Nobody remembered retained earnings. Nobody remembered retained earnings. It will hit automatically. I can see Jackie there. Retained earnings will hit your equity account. So let's write those things. So we have share capital. So we have share capital, 20,000. We have share premium. Share premium, you've given me a figure of 6,000. We have revaluation reserve. Revaluation reserve, I've forgotten the figure. And then we have retained earnings brought forward. Retained earnings for the year carried forward. Retained earnings for the year. These I remember vividly. It was 8992. Revaluation reserve, you have to give me the figure. Evaluation reserve of 4960. Thank you so much. Could you kindly give me the total equity? Could you kindly give me the total equity? Is there somebody who can give me the total equity here? Somebody give me the total equity. Is there anybody who is able to give me the total equity? 39,952. Thank you so much. 39,952, like that. After that, ladies and gentlemen, I would expect you very fast now to go to the liabilities. I also love liabilities so much because on liabilities, you don't categorize again. You're giving us liabilities generally, right? You're giving us liabilities generally, right? So go to the liabilities and then identify all of them. So we have the liabilities. I'll have to rub this, but of course, I'll need this figure, right? So I can even write it here. It is 39,952. So now I'm looking for the liabilities of the bank. Liabilities of this bank. So liabilities of the bank, liabilities of the bank. So liabilities of the bank. Again, because you guys are so nice, I would want to give you 1 minute. You try to really look at who are we liable to. Like, for example, you have the customer deposits. That is money which is on call. These guys will come for their money. Please identify all those liabilities and then you mention them vis-a-vis their figures. 5 minutes. And after this, of course, you're finishing. After this, you're finishing. and gentlemen, so I can see what my students have here very first. What they have here very first. Number one, we have, they have listed so many of them. For example, we have the customer deposits. We owe them. We have borrowed funds. You can see here we owe them. Borrowed funds, we borrowed, we owe, right? You can see deposits due to other banks of 12,820. Provision for debts, 5,500 plus 3,700. Interest payable, 897, 896, I mean. So let's write them slowly. So we write them slowly. So the first one that these guys have given me is what, ladies and gentlemen? What have they given me here? So we have here from what they have given me as liabilities, we have the one that I can never forget. We have here customer deposits. So customer deposits. These guys will come for their money, right? They come for their money. So customer deposit, they gave me a figure of 164,460. 164,460. So 164,460, right? Right. Can take this here. 164,460, right? And then we have in this case here borrowed funds of 7040. So we have borrowed funds of how much? Borrowed funds of how much? Borrowed funds of how much? Borrowed funds of 7040. 7040, right? I can see from Abby, we have deposits due to other banks. They had placed money with us. So in this case here, deposits due to other banks, What also they call placements from other banks, placement from other banks. How much are they talking about? According to Abby, we have 12,820 deposits due to other banks. They're here. Deposits due to other banks. They're here. Deposits and placements due from other banks. They're given us money, right? Right. What else do we have here as an obligation? What do we have? What else do we have here as an obligation that we must pay at the end of the year? At the end of the year, ladies and gentlemen, the other thing that I'm able to see very fast that most of you will forget is this interest on customers' deposit. It has been accrued, but has to be paid. 896. Is there anybody who remember this? Is there anybody who remember this? Let me check. Yes, interest payable, 896. Nancy Kimathi was able to remember this. Interest payable, 896. So we have interest here, payable, interest payable of 886. Interest payable of 896. 896. Is there any other? Oh, even Nicole remember this. Yes. So we have also tax that has to be paid. Current tax, we have current tax of 2,100. We have a tax here of 2,100. We have a tax of 2,100. We have a current tax of 2,100 here. In note number 2, a provision of 2,100 should be made for tax on the profit for the year. So of course, subject to confirmation, but at least it is there. So 2,100, you guys are right. 2,100, you guys are right. So in this case here, interest payable is 2,100. 2,100. Thank you so much. So in this case, ladies and gentlemen, we have here miscellaneous accruals. Thank you very much. Miscellaneous accruals. So miscellaneous accruals, they're giving me a figure of 200 what here? 280. Miscellaneous accruals, they're giving me a figure of 280. There is a dividend. Do you remember dividend? There is dividend we have promised, which you must pay. Do you remember there is a dividend we have proposed, which you must pay? The final dividend, isn't it? Thank you very much, Willie. There is a final dividend proposed. It has not been paid yet. Right? So final dividend, how much was it? Was it 1,000? Right? Was it 1,000? Dividend, final dividend. So final dividend. Final dividend over 1,000. So is there any other thing we have left? Is there any other thing we have left, ladies and gentlemen? Is there any other thing we have left here? Is there any other thing we have left? Gordon Ware, no. Gordon Ware, no. Are you sure, Gordon? What of the provisions for doubtful debt? What of the provisions for doubtful debt? What do we do with them? What do we do with them? Yeah. So please look at the register again very well. Look at the register again very well. And then in this case here, you tell us exactly what to do. Right? Look at this register very well. Look at the register very well. See whether there is anything we have left out. See whether there is anything we have left out. So is there anything you have left out, ladies and gentlemen? I can see charts here. Thank you very much. We prepare for work. Is there anything you have left here? Anything you have left out? Anything you have left out? Anything you have left out? No. Please give me the total here. Give me the total here. Give me the total here. Give me the total. I'll explain about those specifics you guys are talking about, the specific and doubtful debt. Explain about them. Give me the total. So Irene tells me it is 197,796. 197, is that true? 197, 796. 796. Is that true? Is that true? Can somebody confirm this figure? Can somebody confirm this figure really? Someone else to confirm this figure. Someone else to confirm this figure. Now, Marietta is saying it's 188, 188,596. A third person now. The third person will be the tiebreaker. The third person will be the tiebreaker. The third person will be the tiebreaker. Martin has been able to confirm 188,596. Thank you very much. So could you kindly add this and this? Give me the total equity and liabilities here. Give me the total equity and liabilities. Could you kindly do that? Give me the total equity and liabilities there. Total equity and liabilities. Total equity and liabilities. Total equity and liabilities, 228,548. You guys are getting different figures. 228,548. 228,548. 228,548. Is this figure familiar? Is this figure familiar? Is this figure familiar? Have you ever seen this figure anywhere? Is this figure familiar? No. What is our total assets figure? What is our total assets figure? 237,748. 237,748. 237. So we have the provisions, provisions. Just try including this one here. Provisions for bad and doubtful debts plus the specific, add them up, and then we compare notes. We see, add them up. Were they 9,200? 9,200. Were they 9,200? Add them up. Were they 9,200? 9,200. So if that happens, then what will be the figure here? What will be the figure here? 197, 796 still. So there is no change. You want to mean there is no change, 197, 796. No change at all. So then when you take this plus this, are we still going to have this figure of 228? Well, you had included, Students are telling me that they had included. Total is supposed to be 237. No, but 237, 748. 237, 237. Are you sure? Are you sure that the total is 237, 237, 237 what? 237, 748, 237, 748, 748, 237, 748, 237, 748, 237, 748. Right? And what is our total assets figure? What is our total assets figure? The same, The same, 237, 748. Now, so here we are introducing something very important, that these provisions for bad and doubtful debts, we have to include them here. You have to include them here. You know, I work in this case here for a company that deals a lot with these banks. Normally what we do in practice, we adjust any bad debts on the customer account directly. On the customer account directly, but I can see here from what they want us to do for purpose of balances, let us take it as a liability. So I'm also learning something very important here. So provision for bad and doubtful debts is 9,200. So for the sake of the students who will be adding this later, could you kindly give me this total? This total is supposed to be what here? Somebody, we don't have a correct total here. This total is supposed to be 2. This total is supposed to be what here, somebody? This 197. Is it supposed to be this 197, 796? Oh, this one, right? That's after including the 9,200 after. So this 197, 7, does it include 9,200? Does it include 9,200? Yes. And then now 39,952 plus this 197. Is it the one that is giving us now the 237? Is it the one that is giving us the 237, 748? Yes. So I can see most of you are saying you are going, you need to prepare for work. So it has been a pleasure, of course, hosting you. I would only want to be left with a few students that I can now take to the practical. I would want to display an income statement and a statement of financial position of KCB Bank. Of KCB Bank, I would want to demonstrate. If you still have the time, please stay around. I show you now in practice, how do these things look like? How do we prepare them in practice? Is there somebody who has time for that? I show you now the practical aspects here. Anybody who has time for that? I'll not be left alone, Great. So it will give me like 3 minutes. I retrieve this on leave, yes. Please, how long? It will take like getting the document will take me 3 minutes. Displaying it here will take me 5 minutes, just to show you in practice. Because you see, after this, and that is why this concept was brought in, this advanced level. After this, you should be able to go to a bank and prepare financial statements for them. Financial statements for them. using SAP or using our software called Arrow, AARO. Right. So they have told me they're giving me those 8 minutes in total. Great. So I hope you guys are still with me here. Right. So this is the year 2020 integrated report and financial statements. So this is quite key for you guys who are doing advanced financial reporting. What's an integrated report? An integrated report, ladies and gentlemen, basically is the financial reporting framework where we present our financial performance on the 3 Ps framework. 3 Ps framework. We have to say something about profit. We must say something about how good we were to the planet and how good we were to people. Right? Integrated reports. Remember, integrated reports also, when you are mentioning something to do with your capital, you must disclose what we call the 6 Cs, the 6 capitals. So basically, you are looking at both the qualitative and the quantitative financial performance, putting them together through what we call an integrated report. We have very few companies that have been able to prepare integrated reports in Kenya. We have a KCB Bank, we have EABL, we have BAT, we have Sassini in the agricultural sector, very few. But remember, CMA, Capital Markets Authority, wants all listed companies here to prepare integrated reports where they have to give their social impacts, their governance structures, with the chairman, who is the CEO, do they know their roles, right? The related parties, basically, how do they operate, right? And then, of course, we have governance, or rather environment. So we have a social governance, environment, plus the financial statements now. The financial statements should come at the end, because really, they are not the main thing. And the integrated reporting, we are looking at longevity of an organization. And if you want this organization to stay in the long term, you must be very good to your customers. You must look at the qualitative aspects. You must be very good to your employees. It is, so you can see about this report, the KCB Group PLC integrated report and financial statement 2020 is our statutory and regulatory reporting disclosure. It comprises information about activities. Look at this. You'll be asked this in your exam. Activities, strategy has to be shown. Approach to operating responsibly, financial and non-financial results for the period of January 1st, 2020 to December 31st, 2020. The aim is to comprehensively report to our existing and prospective investors in an integrated way to reflect how the organization operates. If I knew who is the CFO of KCB, this is a very good person. A person who does that kind of introduction. This is somebody who should be getting like 2 million Kenyan shillings a month. So they've given us the framework very well. The report has been prepared in compliance with global best practice and the prudent accounting frameworks. It is aligned to the provisions of the Companies Act 2015, Capital Markets Authority guidelines, the National Securities Exchange NSE listings manual, and the Central Bank of Kenya, who is our regulator. This report is also in compliance with International Integrated Reporting Council, IIRC guidelines. The group's annual financial statements were prepared in accordance with International Financial Reporting Standards, IFRS. The report is part of our commitment to be transparent and accountable to our stakeholders. Remember, one of the objectives of integrated reporting is to have a situation where people will be able to see you through. It's a glass. You need to be very transparent. We've got nothing to hide. These are the taxes. This is our business model, right? These are our strategy. We show everything. The group constantly considers whether there are additional reporting frameworks or metrics we could use to enhance our disclosures. Assurance, who did the audit? The annual financial statements for the group KCB Bank Kenya, National Bank of Kenya, remember these guys were acquired, NBK, KCB Bank Tanzania, KCB Bank South Sudan were audited by Ms. PricewaterhouseCoopers. KCB Bank Burundi and the KCB Bank Rwanda were audited now by who we call the component auditors, auditors of the subsidiaries, who are KPMG, while KCB Bank Uganda, and while KCB Bank Uganda was audited by Ernst & Young. So you can see here under the governance, who governs us, right? And remember, they are doing this in both English and Kiswahili. It's the regulator who says that. And that is why you guys also have to keep on, in this case, you're working on your Swahili, because it's a medium of what here? Presentation. A review of our strategic themes. We have the corporate governance statement. It was quite unfortunate that CASNEB removed corporate governance from leadership and management. It's something they need to bring back, right? And then we have the financial water statements and notes to the accounts, page number 88. So page number 88, financial statements and notes. They are here. I hope my recording is on, because I'm also doing this for the sake of my students. So you can see these are creative. CF, of course, is not working alone. He's working with a team, but the team leader takes all the credit. So you can see they're trying to show us numbers here from nowhere, just the theme, the corporate colors. They're showing things here which can indicate that things are not very bad, right? So we have the corporate information, report of the directors remuneration report. You must always show this. Statement of directors' responsibilities, etc. The most important thing will be for us to go to the income and the income of the bank. The income of the bank, that will be so interesting to us for this class. But later on, when we get time, if you can give me like an hour, even if it's after your exams, I would want to show you how annual reports of these big corporates are done. How annual reports of the big corporates are done. Now, ladies and gentlemen, here we are. Ladies and gentlemen, here we are. I would want us to go straight away to page number 108. Right? So, ladies and gentlemen, you can see here, page number 108, we have our incomes. Them, they have really consolidated them. So you can see they have the dividend income. We have interest income. We have net foreign exchange gain. And then we have other incomes. Them, they have really consolidated. And why they consolidate like this, it's because they always give you notes here. So you can go to note number 11, note number 8, note number 10, note number 11 to get to appreciate how they were able to get their total income, etc. Right? Right. And then, of course, now they have their expenses again, which are what are very condensed. Right? And then you can see like a very important thing, other comprehensive incomes. This other comprehensive income is a section that we normally use for purposes of what here, for purposes of capturing any remeasurements, any revaluations. So like you can now see items that may be reclassified subsequently to profit or loss, net loss on financial assets at fair value through other comprehensive incomes, right? And then you can see they went ahead to get their earnings per share, both basic and diluted. And they've been able to even give you a note on how they got their diluted earnings. I wish we had time, not today, in future, especially for purpose of your practice. I would want us to look at practically, how do they get this diluted EPS practically, in practice. Great. So the same time, ladies and gentlemen, if you look at the statement of financial position, you can see like assets, they are not discriminating assets. They're basically coming and putting all of them here together. We have liabilities and equity. You can see the liabilities, etc., due to related parties, total liabilities. Then we have equity share, capital share, premium, other reserves, retained earnings, very, very important. So these are things that you guys should be able to do what you appreciate. And nowadays, remember, the statements you publish outside there, you must sign. People must, at least one director, secretary of the board must sign, the chairman of the board must sign, and then we have the CEO. They must take full responsibility of these financial statements. It is their duty to prepare them. And then now the auditor will come and pick up from there. So, ladies and gentlemen, it has been a wonderful morning. I want to believe that you guys have been able to really appreciate the lesson. Thank you so much. Bye-bye. Good day. Good.